Yeah, those were the key issues, Carl. Really on aviation, which is the bread and butter for GE. As more people travel, aviation orders are improving. It's also increased demand for its aftermarket business, with shop visits up 40% year over year as planes spend more hours in the air. CEO Larry Culp telling me this is a business that he sees sequential improvement in growth. It's also a higher margin business. But GE is not immune to supply chain issues. Culp saying it's really akin to playing a game of whack-a-mole, calling it a tactical, muscular endeavor with multiple moving parts. Culp says the issues are showing up mostly in healthcare, about 9 points of growth in the quarter because of orders GE just simply could not fulfill. Its renewables business not panning out the way GE had hoped initially. Culp says that's primarily due to the pending tax credit extension and inflation issues weighing on the business. To get that business back to profitability, he says it will take time. He's looking at not next year, but 2023. Now we're looking at the stock moving higher here. Just take a look at the balance sheet. $75 billion in debt reduction over the past 3 years. GE is currently in talks with a French supplier to sell its nuclear turbine business. But over time, Culp doesn't really see the focus being on net asset sales. That's, of course, been a strategy for the last 2 to 3 years. But over time, it's really about focusing on the higher margin businesses like aviation, seeing a recovery in healthcare, and growing earnings. That's where he sees growth going forward. And I think those comments are what lifted shares of GE, which were actually flat when they opened, but now up about 3% here, guys.
Shepard Smith here. Thanks for watching CNBC on YouTube.